Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's May 10th. Hope you guys are having a wonderful day so far. We got a few economic news releases to go over and some important ones. We'll start off with the weekly jobless claims. So last week we had received claims of 211,000 people applying for unemployment. Forecast is supposed to have a slight uptick to 215,000 this week, and it came in again at 211,000. This is keeping us at a 49-year low of initial jobless claims. This just tells you, kind of gives you a good gauge as to the job market, what's out there, and how strong it really is. And as we indicated earlier in the week, when we saw the small business index with their numbers, their biggest concern is finding skilled labor for their jobs, and that's going to most likely increase or put a little pressure on wage inflation as well, primarily because they need to try to keep their employees from jumping ship and going somewhere else, and that's the big concern in their areas right now. So let's kind of move on here. We got inflation data the rest of the way here, which is we got the headline number, Consumer Price Index, or CPI, for the month of April. So March, it dropped 0.1%. Forecast was supposed to be 0.3%, and it came in lower than expected at 0.2%. Now this did go up slightly. It went up, I believe it was 2.4 to 2.5% year over year. Now, when you strip out food and energy, we get the core CPI, and this is really kind of more what we look at because the food and energy are variables that can really fluctuate and can be highly volatile. So it's just easier to look at the core. So this is an important inflation gauge to look at, as well as the PCE. Even though the Fed puts more weight on the PCE, they do look at the CPI as well. So here we have a 0.2% increase for the month of March. Forecast again was supposed to be another 0.2% for April, and it came in at a much lower level at, well, not much, lower level at 0.1%. Now this remained at year over year of 2.1%. So again, looking really good so far today. So we'll see how everybody else thinks. So stock market's up. It's basing the information on the low inflation number and the jobless claims. It's basically taking that information versus any geopolitical, and we're getting kind of, again, towards the end of the earnings, corporate earnings reports. There's still a few here and there coming out here, but we're kind of through the bulk of it. But the big things were the economic data, and that's kind of driving the markets for the most part today, at least providing the foundation for today. And as a result, the bond market is up a bit too. It liked the lower inflation data. Usually inflation will scare bonds, and today it's up, currently up over about 13 basis points. Earlier it was up around 22, and it's pulled back a little bit to about 13 basis points. Now we could have little volatility here. Yesterday we had a 10-year Treasury auction and went well, but today we also have a 30-year bond auction going on today, and of course, if the demand is met pretty low, that could affect bonds in a negative manner, but if it's met in a positive manner, that could help us out, maybe even boost us a little bit further and bring us back closer to our earlier sessions high so far. Again, so be prepared. Could be a little volatility yet again today, but so far good news here. Yields have pulled back a little bit as we're down. Yesterday we closed at 3.01. Right now we are down about 2.97, which is gives us a little bit more breathing room here, and definitely further away from this ceiling of resistance here. Which if we break above that, that could be another 150 basis points, which means 1.5 point difference. So that one rate you got at no point today could be 1.5 points tomorrow if it jumps up that high. So again, we really want this ceiling of resistance holding tight. And that would translate to about 0.75% in the interest rate. So again, we just really need to kind of hope this ceiling here holds. At some point, yes, it probably will break, but we're hoping that it will take a little bit more time, ease into these rising interest rates versus getting one hit with one big chunk of it at one time. Kind of like ripping the band-aid off, I guess, so to speak. Anyways, that pretty much wraps things up. Rates are a little bit better today as a result. But again, we still got a lot of some volatility ahead with those auctions, so be prepared. It could go one way or the other. But if you guys want to get more updated and get more information on that, just come over to Twitter. You can follow me at Mike Bjork on Twitter. Hope you guys enjoy the rest of your day. Thanks so much for watching. Again, we'll see you guys tomorrow. Bye-bye.